After World War II, 44 Allied countries met in July 1944 to decide on the financial architecture for the post-war world. And there were many changes in what was called the Bretton Woods Agreement, including the international reserve currency being the dollar rather than gold, although the dollar would notionally or theoretically remain convertible into gold. However, two institutions were also established in Washington, DC to help revive the financial system. Firstly, the International Monetary Fund, or IMF, which is what we're mainly focusing on in this video, and the International Bank for Reconstruction and Development, or IBRD, which later combined with the International Development Association, or IDA, to become what we know today as the World Bank. And you can see the initials in the logo there for the International Bank for Reconstruction and Development, or IBRD, and International Development Association, or IDA. The IMF was initially supposed to encourage international financial cooperation by regulating exchange rates, and what became the World Bank was supposed to help rebuild countries shattered by the war. Please do like this video and subscribe to the channel so I can continue to offer more content for you in future. And let's jump a bit ahead to the 1970s. Because when the Nixon administration in 1971 severed the final link with the gold standard by ending gold convertibility of the dollar, or in other words, gold was no longer backing the dollar, this was the end for the Bretton Woods Agreement. But it certainly wasn't the end for the IMF or World Bank, which still operate today. And before we look specifically at the IMF, let's look at what led it to be what it is today. Because then, when the Arab-Israeli War and the oil embargo happened in 1973, most central banks tended to alleviate the price shock with easier credit, or in other words, they printed money, which led to higher inflation, as you can see in this graph, and this period was known as the Great Inflation. With currencies exchange rates floating again and offshore markets like the Eurobond market flourishing, the 1970s saw a revival of non-governmental capital export. For example, between 1975 and 1982, Latin America quadrupled its borrowings from foreigners from $75 billion to more than $315 billion. Then in August of 1982, Mexico declared that it was no longer able to service its debt, but there was now a new system in place. Unlike in the past, when countries would show their might through military force, for example, when a country defaulted on its debts. And this new system and financial policing was now played by the IMF and the World Bank. And these imposed a list of 10 economic policies on the debtor countries. Impose fiscal discipline to reduce deficits, reform taxation by broadening the tax base and lowering rates, liberalise interest rates by allowing the market to set them, raise spending on health and education, secure property rights, privatise state-run industries, deregulate markets, adopt a competitive exchange rate, remove barriers to trade, and remove barriers to foreign direct investment. And old imperialist countries and empires would probably be proud of this, because the critics state that any loans given out by the IMF or World Bank would simply be used to buy Western, and in particular American, goods from American firms, including arms to keep dictators or oligarchs in power. And that the cost of these structural adjustments that needed to take place in these countries that we've just seen would actually be borne by the inhabitants of them. And you can see here some protests against them both. And let's look at just one example of a country that the IMF has lent to in a bit more detail, and that country is Argentina. There were two bailouts in the IMF to Argentina in 2001, totaling $23 billion to stop Argentina defaulting on its debts in a year when per capita GDP dropped by 12%. Then in December of that year, the IMF offered it a final lifeline. The Argentinian government announced a cancellation of all of its foreign debt, including bonds worth $81 billion. And in nominal terms, this was the biggest debt default in history. And fast forwarding a bit, in 2018, the IMF approved its biggest ever loan of $57 billion to Argentina. Then in March 2022, the IMF agreed a $45 billion deal with Argentina. And on the 13th of January 2023, Argentina's inflation hit its highest level in more than 30 years, with consumer prices rising by 95% in the 12 months to December. And inflation climbed even higher to 142.7% in October 2023. So I suppose the question to ask is, given all of this, has the IMF actually helped these other countries, including Argentina? And let's look at another example of discontent aimed at the IMF and the World Bank, because a man called John Perkins, an author and former economist for an energy and engineering company in the 1970s, who you can see pictured here, claims that he was specifically employed to make sure that the money lent to countries, in this case like Ecuador and Panama, by the IMF and World Bank would be spent on goods supplied by US corporations. So he says, among other things, that economic hitmen like him were trained to build up the American empire by creating situations where as many resources as possible flow into the US, its corporations and governments. And although it has regional offices around the world, another argument to back this up is that the IMF has two headquarters, both being based in Washington, DC in the US. The World Bank is also based there too. Even Nobel Prize-winning economist Joseph Stiglitz, who was a chief economist at the World Bank between 1997 and 2000, stated that the IMF took a rather imperialistic view of his role and championed market supremacy with ideological fervour. He also said that many of the policies that the IMF has pushed have contributed to global instability and jobs being destroyed. He then goes on to state that even those countries that have experienced some limited growth have seen the benefits go to the well-off. So there's some pretty critical views of the IMF and the World Bank. And I think now's a good time to note that it's not just the US and these two institutions that are put under the microscope as unelected international organisations that have a large say in global policy and finance. Because other examples include the OECD, or Organisation for Economic Cooperation and Development, which has its headquarters in Paris, France, the BIS, or Bank for International Settlements, that has its headquarters in Basel, Switzerland, and among others, the WEF, or World Economic Forum, that is also based in Switzerland, as well as not forgetting the countries and governments that work with and support them. And we could go further than this, for example by looking at the European Commission. But let's take a bit of a closer look at the IMF today. A 70-year-old Bulgarian economist, who's pictured here, has been the managing director of the IMF since 2019, before which she was the CEO of the World Bank for 2 years. And she took over at the IMF from Christine Lagarde, who you can see here, who's now the president of the ECB, or European Central Bank. You can see here that the original 44 countries that created the Bretton Woods Agreement in 1944 has now become 190 countries that are IMF members. The IMF has around $1 trillion that it can lend. It gets most of its money from its member countries, who contribute based on their size and economic position, with the US, Japan, France, Germany, Italy, and the United Kingdom apparently contributing the most. And I'm surprised China's not on that list. And about 2,900 people from 150 countries are employed by the IMF. But what does the IMF claim it actually does? Well, the stated aim of the IMF is to achieve sustainable growth and prosperity for all of its 190 member countries. And it says it does this by supporting economic policies that promote financial stability and monetary cooperation to ensure productivity, job creation, and economic well-being. It's a good sales pitch. And it provides policy advice to countries, financial assistance, and training to be able to deliver this policy. The IMF collects a huge amount of economic data on all countries and provides economic forecasts. And it even created its own reserve currency called SDRs in 1969. So we've seen the positives of the IMF through its aims, through the fact that nearly all countries are members, and through the financial assistance it provides to countries in need. But we've also seen the criticism that is directed towards the IMF and World Bank, with another example of that being that they, along with other international non-elected organisations, such as the World Economic Forum or WEF and Bank of International Settlements or BIS that we saw before, they are supporters and advocates of CBDCs or central bank digital currencies. And they have been working with countries to advise them on these and help them with them. So undoubtedly, these two organisations that were originally set up after World War II today have large influence over many countries and global policy. But I'd love to know what you think about the IMF and World Bank in the comments below. Do you think they're a force for good, ultimately, or as the title alludes to, wolves in sheep's clothing? And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.